What's going on, guys? My name is Richard and welcome back to another weekly watchlist video. As always, we'll go through the major indexes, the leading stocks in the market, as well as check out how my previous watchlist performed over this past week. And we'll also read through the IBD Big Picture article, as well as check out the GMI signal and put all that information together to determine what the current trend of the market is. So getting right into it, we'll start with the major indexes and first check out the Nasdaq 100 on a weekly time frame. And overall, you can see we were down on the week, down 1.52%. So overall, another consolidation week. And looking at the weekly closing range, we are below that kind of lower fourth. So that is reason to be a little bit worried. This suggests that we'll either go sideways next week or continue lower. And looking at the S&P 500, you can see that based on the weekly bar, it also had a failed breakout out of this cup and handle formation right here. And looking at the weekly closing range, we were in the lower fourth once again. So we're either going sideways or lower. And then also checking out the small caps, looking at the IWM, you can see that we are also down 0.35%. And once again, we are in that lower fourth, suggesting we go sideways or down as well. And we also had a failed move upwards, trying to break through this resistance level right here. And looking at the QQQ, let's go to a daily time frame and let's show the trend lines right here, because this channel has really been holding nicely. And when we go above it, we're likely to move down, and we go below it, we're likely to find some support and get back into this channel. And looking at this past Tuesday, once again, we were knocked down, and on Friday, we closed below the lower trend line as well as the 21 EMA, which definitely suggests weakness. And going through the day-by-day analysis, on Monday, we had a very strong day. I actually bought a few things such as Shopify and SE on this day. Growth stocks were acting very well. But then on this Tuesday, we had a gap up and then a close in the lower fourth of the range, which was a negative sign and a pretty bad reversal. And this was similar to this bar right here. But on this Wednesday, we didn't see that kind of positive action. And overall, it just was kind of a normal day in the markets. And then on Thursday, we had a very bad day. It was a distribution day on the Nasdaq. And once again, we closed in the lower fourth of the trending range, although we did bounce off the 21 EMA here. But on Friday, we had a definitive close below that mark, but you can see it did have a close in the upper fourth, which is one positive. So based on the daily chart of the Nasdaq, we either go sideways or go up because of this nice closing range. And I think this 30-day moving average is very critical, and I really want to see it above this line, this moving average right here. And overall, looking at the S&P 500, it is a little bit stronger than the Nasdaq at this time, although we did have a failed breakout from the cup and handle formation that it was in. And overall, I do want to see it hold this 21 EMA and hopefully move up from this point. And the IWM looks very similar to the S&P 500, although it's even stronger because it's holding that 10 EMA. And looking at the Dow Jones, the DIA, it also needs to hold that 21 EMA to sustain this uptrend. So that is the major indexes, and looking at gold, the GLD, you can see it actually had a short-term stochastic cross on this Monday and then broke out above this shelf right here and had a very strong week. Overall, it was up 5.04%, so a very strong breakout on above average volume. So very strong stuff from gold. And looking at the VIX, overall we were up on the week, up 0.62%, and this 50-week moving average rather seems to be support at this time. And looking at the daily, you can see we had a big jump earlier in the week, although we were actually down on Friday, which is interesting because of the strong action at the close on Friday. And taking a look at the FFTY, the Growth Stock Innovator IBD 50 ETF, you can see that most of them bounce at the 21 EMA, similar to this index. And overall, we did have a pretty strong close on Monday, although we did have a big distribution day on this past Thursday. And finally, looking at XLF, you can see it was actually pretty strong last week. Overall, it was up 1.34%, actually showing a green dot and 21 retake on the weekly chart. So that's the major indexes. And now let's talk about the potential true market leaders. All right, so going along with the cancel methodology, you want to be studying these leading stocks on both a daily and weekly basis to determine what the current health of the market is. If these stocks are acting well, that means institutions are willing to take more chances and invest in these big growth names. And if it's a little bit more risky, they'll transition their money out of these names and into more stable investments like gold. And sorting by the weekly change, you can see that most of them were actually red on the week, suggesting that there was weakness in these leading names. But overall, if you go through them, apart from Tesla, which did report earnings last week, most of the pullbacks were on lighter volume. And I take this as a positive, and also a lot of them are very close to their 21 EMAs and had big positive reversals on this Friday. So these are things you should look for. Look for stocks that are holding their 10 or 21 EMAs, and when they were pulling back, they were doing it on below average volume or below the volume spikes of the previous weeks. So overall, a couple of my favorites are LVGO, which had a nice reversal and almost was red to green on this past Friday, as holding that 10 EMA, and Twilio as well stood out to me, showing good RS after this nice breakout on above average volume, and then the pullback on lower volume. So keep an eye out on those leading stocks. If they set up and have green dots early next week, I'll be looking to buy and invest in them as well. So that's leading stocks, and now switching over to my weekly watch list and sorting by weekly change. This definitely looked a lot better on Monday, but overall we did have some that were positive. You can see DQ had a nice breakout early in the week. LVGO was also strong. TXG was positive on the week. Spotify was strong until the end of the week, but most of these are holding, as I said, the 21 EMA, and if they fell, it was on lower volume. However, you can see SDGR did fall all the way to the 50-day moving average, which is a potential line of support, so look for a bounce off that early next week. And looking at Tesla, it did kind of break down last week. I did have to sell half my shares before earnings, and then also half on this day because my expectation was not met. Often it's not the earnings report that's important, it's the reaction to the earnings, and I didn't see a huge rush into buy on that day. And I set my stop at the low of the previous day just in case, and it was hit on this Thursday, and it did save me from this drop on Friday, although it is holding that 21 EMA and is still acting reasonably well. But apart from the other true market leaders, it did drop on above average volume, so once again, that's something that you need to keep in mind. So that's pretty much it for my watch list. I did buy DQ on this Monday after it gapped up on huge volume, but I did sell my shares on this day after a failed breakout. But I will be looking to get back in because it is holding nicely and forming a nice consolidation right at all-time highs. So that's my watch list, and now let's talk about the sentiment surveys. All right, so here we are on my Twitter, and you can see that each week on Friday I post this question. In 1 week, the Nasdaq 100 will close either higher, about the same, or lower. And last week we did have a high reading at 51.8%, said it was going to go higher. And thankfully on this Friday, we actually did see a nice lower number at 38.3%, which is a big drop, which suggests that there's more fear in this market. And overall, this is a good thing. That means that the pullback is getting rid of that kind of euphoria. And overall, I think this is a positive thing for the sustainability of this bull market. So that's the sentiment survey. And now let's switch over to the IBD Big Picture article from this Friday. And overall, their headline is Stock Market Pullback Continues on Rising U.S.-China Tension. IBD 50 stock Vertex struggles. Reading through the article, they discuss the rising U.S.-China tensions, which could have contributed to the weakness that we saw last week. And they also discuss Intel and how it had a key product delay, which helped out AMD and TSM, both of which had very strong weeks and were up 16.5% and 9.7% respectively. And they talk about how the stock market pullback continues and how the Nasdaq paired its losses but closed below its 21-day moving average, which is a key support for my style of investing. And overall, they discuss how we narrowly avoided a distribution day on Friday because volume was lower, but overall in the week, we saw an increase in institutional selling, which is not a good thing. And overall, you can see that we now have 4 distribution days on the S&P 500 and 3 on the Nasdaq. So still not too elevated, but a big jump this week. And they also discuss both Tesla and Vertex, which showed weakness. Tesla getting down 6.4% after a downgrade, and also Vertex closing below its 50-day moving average. And that's pretty much it for the article. They also have MasterCard here, which is a breakout stock to watch with a 316.16 buy point on a cup and handle formation. So that is the IBD Big Picture article, and overall their current outlook is still a confirmed uptrend. And looking at the GMI signal, you can see it still is green since April 27th, and overall the GMI score on Friday morning is still a strong 5 out of 6. And you've also got the QQQ short-term uptrend all the way at 75 days, which is on the higher end. And as he points out, GLD is climbing higher and the dollar, the UUP ETF, is down. So there are some signs that there is weakness in this market. And because of this reason, along with the QQQ falling below its 21 EMA and below its lower trend line, I am shifting my view to an uptrend under pressure, although that could completely change early next week if the leading stocks continue to act well and rally from their drops in the 21 EMA, and if the QQQ regains that key moving average and that lower trend line. So be cautious out there, know your limits, know your risk tolerance, and best of luck next week. But that's it for me. Thank you guys so much for watching. Remember to leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.